So welcome, thanks for joining. So I'm John Atkin, I'm with RBC Capital Markets. I work in the San Francisco office, and I'm pleased to be joined by Tim Horan from Oppenheimer, Bob Morse from Strattam Capital, and Brandon Amber from Palladium. And what I'd like to do is maybe start off with Tim and work down the line. We can have a brief self-introduction and tell us kind of what areas of telecom you're focused on and what parts of the capital structure you're focused on.
Thanks, Jonathan. I'm a stock analyst. I don't know if a lot of people know how Wall Street works, but I provide research and kind of tell people what stocks to buy and sell. So more on the agency side of things. I think my co-panelists here are more on the principal side where they actually are doing a lot more of the investment. I've been following communications for 20 years. The last 4 or 5 years has kind of morphed into a lot more cloud as we kind of see the industry kind of clearly converging and driving all the growth in the industry. I follow a fairly broad range. My thesis has been for over a dozen years that we're moving to what we've called cloud computing for a dozen years. And the industry we think is going to get a lot more horizontally segmented. We think the applications have been getting separated from the underlying networks, and a lot of that's been kind of proving out, but we think that's going to remain a trend for the next decade. The number one point I wanted to make, and I came here, I'm not sure if any of you are looking to kind of access to public markets or raise capital, but the markets right now are very, very strong and very open, and this is kind of one of the top 3 or 4 periods I've seen in my kind of 20 years here.
My name is Bob Morse. Am I on?
No.
Oh.
You should be on now.
Yeah, there you go.
How are we doing now? Still not? Why don't you give an intro?
Yeah. Okay. Let me jump in there. My name is Brandon Amber, based in Hong Kong as a head of Palladium Partners that focuses on advisory and development across telecom media technology. I've been in Hong Kong and focused on Asia for 8+ years. Areas that I've been focusing on has been a lot more on the infrastructure side of telecom, along with telco towers, data centers, underwater cable, domestic fiber, along with spectrum assets across from the 700 to 2.5 gigahertz bands for looking at 3G and 4G spectrum, and at different times, more developed markets to emerging markets cases. So I've worked with a few of the private equity and currently is an advisor to Apollo Global Management out of New York, and helping them look at opportunities in the buyout space across Asia.
All right, let's try this again. How are we doing?
Perfect.
All right. I just paid my conference registration fee, so. I am CEO of Strattam Capital. Strattam is a newly formed private equity firm focused on core enterprise IT and services. My background is about 20 years in the private capital markets, doing private equity investing, primarily in the US and primarily around enterprise IT, although that's included a lot of communications businesses, particularly in the data center, fiber, and managed services spaces. Businesses you might know include Savvis Communications, Telecity in Europe, and private businesses today in the US like BioWest and Intermedia. I think I'm here to help provide a perspective on what's happening in the private markets, in particular the technology side of what's happening in the cloud, and with a particular focus on the US and to a lesser extent Europe.
Great, so I think we've heard the word cloud mentioned twice, but maybe kind of bring it up a level, and starting with Tim, you cover a broad range of different subsectors within telecom, carriers, infrastructure providers of various stripes, and tell us, from the standpoint of your clients, how do they look at these different models, and what type of investor is looking at some of these big companies like AT&T and Verizon? Who are the folks that are maybe preferring data center cloud providers, and maybe there's hybrid models out there as well?
Well, I would say, I think investors are kind of confused right now, and a lot of Wall Street's in flux because things are changing, so rapidly. A lot of the legacy carriers are not growing all that much. And so there's quite a bit of bifurcation. We have companies that are kind of growing very low single digits, not growing at all, kind of traded 1-2 times revenues. Then we have a whole bunch of other companies that are kind of growing at 20+%, and they trade at like 7, 8, 10 times revenues. But a lot of what's happening is the industry is getting very bifurcated with companies that provide either the basic infrastructure like towers or fiber or data centers, and a lot of them are becoming more REIT-focused, and they're looking to provide more stable dividends over time. And then you do have AT&T and Verizon, which I think are perceived to be more stable dividend-paying stocks. They're a little bit more wireless-focused. And then we have the high-growth names. They would be companies like, more recently, Ring Central came public. They provide voice over IP to small businesses and are growing, extremely rapidly. But you got very, very different investor bases in them. REITs are fairly dedicated. You have more income funds, AT&T and Verizon. And then you have really more growth funds where I think a lot of hedge funds have been very focused on growth. And then you have a lot of, you do have some mutual funds that are more specialized in growth that invest in those names also.
Tech on the fly.
So, if anyone can hear me. So Brandon, you've spent some time, I think 8 years plus in the Asia-Pac region, and maybe compare, for the audience, both within the region and compare to North America and other parts. Where are we in terms of adoption of cloud, adoption of outsourced models like towers?
Yeah, I would say in a lot of cases with the future evolution, the cloud and managed services and the comfort of having somebody else manage and secure your data is definitely much more advanced in certain cases in the United States. You see AWS starting to make an inroads. We were just Tim led a panel with even showing about KVH and their kind of growth in certain of the what I call the tier 1 cities of Tokyo, Hong Kong, Singapore, and even Sydney. But the future of cloud and data center growth will be into China, along with potentially Manila, Bangkok, Jakarta, and even into India, where companies like an NTT Communications made an acquisition in the India market. Equinix has expanded their reach into Asia Tone to buy more capacity in Hong Kong and into China, along with 21 Vianet's growth in China itself. But when it comes to the SMEs and the enterprises, it is still a little bit getting a comfort level and security level to be able to have a third-party provider being able to host all their information and getting used to that level and the cost structure. Pricing has to be changed at a little bit different case than the way it's done in North America or even in Europe. But I think that is coming, and that's really what the next 5 to 10 years of growth in the cloud services will be in the Asia region, because today's SME will be tomorrow's large corporation potentially, and especially based out of Asia, but then going international and getting footprints in Europe and in the Americas.
So mixed trends in the adoption rates of domestic SMEs to adopt outsourcing, and yet a lot of investment taking place by U.S. headquartered companies and multinationals. Yeah. So as they make those investments, are they focused on meeting the needs of other multinationals with Asia-Pac operations, or where are they in terms of trying to penetrate the domestic?
I think the easiest for some of the players, it's a case-by-case basis in the way, or country by country. It's multi-billion people across Asia, but each market is so different, and you really have to, even if you're a multinational coming into Asia, there's not as many third-party providers that can give you a full blanket coverage and saying, okay, now I have offices across 7 different cities, 6 different countries, whatever. There's not many providers that can do that. There's still, maybe the IBMs or the Fujitsus or the HPs, and there's certain places where they need a provider in market to market. I think there's going to be a little bit more of a consolidation or getting more feet on the ground to build a kind of a turnkey solution and say, okay, I can help you across multiple markets from day one, and that's where it's going. From the multinational, but from then the local SME, they're needing services in their market, and as they grow and say, okay, now I'm going to go outside my home country and say, I'm an Indian company or an Indonesian company, and I want to get into Singapore, I want to get maybe long-term into a London or Europe, or even to California, so something close to San Jose. That's where it's going in that side of things.
So, Bob, you've had board positions with operators that have European bases, that have U.S. bases. You've spent a lot of time looking at Asian opportunities. How do you kind of size up different countries within Asia in terms of data center, cloud adoption, and how ripe are they for private investments?
Sure. I'll echo a point that was made earlier. Even if the U.S. is a little bit further ahead in adoption, it is still at a very early level. Over 80% of the compute cycles are still on-prem with people, and those things that aren't done in-house, most have just been sort of moved out into a data center. So I think despite the fact that we're seeing large volumes of investment, we are still at a relatively early stage of adoption. The second thing I'll say is, as we see markets like this evolve and grow, we see a lot of customer segmentation and specialization. And I think that we're going to see that with very different markets catering to international businesses who want a safe hub and may have concerns about data security or network access, which will be driving factors for them more than price in terms of where they're going to hub in Asia. And then you see operators with very different approaches who are catering to either the local market, an India for India business, or serving carrier needs or other things. And so I don't think we'll see a one-size-fits-all there. We haven't in the U.S., and I think as the market continues to grow, we will continue to see this sort of fragmentation and increasing number of providers who are focused on different specialized niches.
So I'd like to ask the audience to chime in with any questions if there are any, and just to kind of briefly follow on that point, 21 Bionet in China would be a good example. You know, I think 98%, 99% of their business is domestic Chinese hosters and SMEs, and yet you've got some pretty high-profile investments by Equinix and others in that market that are catering to the 1%, which is other Western-based multinationals that happen to have operations in the region. So briefly, any questions?
No questions.
So maybe to come back on a point that Tim made, you know, some of these big companies like AT&T and Verizon, there's so many different moving parts. There's fixed line, there's mobile, there's video initiatives, there's copper-based businesses that are declining. How do they view their strategic services? So that would be data centers, cloud. How fast are the growth rates that they're seeing? Are they big enough? Are these growth rates fast enough to offset the declines that they're seeing in some of their older businesses?
Well, we've seen Verizon buy out the Vodafone stake, so something like 70% of their revenues now are really wireless, and wireless for them is kind of growing in the 4 to 5% range. Verizon bought Terramark, and I think it's been a little bit of a challenge to figure out what the right strategy is going forward. I think that business is growing a little bit slower than what they would have expected. But I think all the carriers are struggling with what do we do with cloud here. Terramark has built up their own kind of protocols and standards to enter the cloud market, for example. AT&T is looking to use OpenStack, and you have, I think CenturyLink is struggling. They bought a company, Savvis, kind of what the right way to go is. I think Amazon is creating a lot of disruption in the industry, and they're trying to figure out how do they respond to that, how do they really take advantage of that. There is, I think there's been some recent net neutrality rules. I'm not sure in the United States where the audience is of that, but I do think AT&T and Verizon would like to use their network and leverage it a little bit more to maybe have a higher quality product or be able to kind of charge more for that network and give themselves a little bit of an advantage and try to attack the cloud that way. But they're still pretty much up in the air. I personally think they need to kind of wake up a little bit and maybe work together a little more closely. They've all been kind of working at odds. I do think the whole kind of coordination or intercloud that people are talking about, makes a huge amount of sense for the carriers. But right now, their longer-term strategy is frankly not really clear to me. So
CenturyLink bought Savvis. I think the Savvis brand name is going away as of yesterday's announcement. Is there anything to read into that in terms of are they now done with the integration, or are they moving in a different direction?
I think they're probably their public comments. They want to move a little bit more into managed services, but it seems unlikely they're going to be able to get the scale on doing a public cloud on their own. I think it remains to be seen. I think you might look for them to maybe white label some of the other public clouds that are out there, or figure out some niches that they can compete in. But I personally think a lot of this stuff is still up in the air. If I was them, I would look. Basically, what I was saying is to look to kind of coordinate, to work together a lot more closely, and frankly, try to be a cloud on top of a cloud, be almost like a middleman for the cloud. But we're not really hearing a lot of comments out of the companies on where they're heading, to be honest with you.
Yeah, and the cable companies as well are facing pressures in their core video business, and so they're looking at the broadband pipe as a way to monetize over the top. Some of them have bought cloud companies or made cloud investments. On the topic of large companies, though, I'm interested in Brandon, in maybe your view, and Bob, if you have a perspective as well. You've got NTT, you've got Singtel. On the systems integrator side, you have Fujitsu that have kind of presence across the region in many of these lines of business. How do you see them making either further investments in markets that they already operate in, or in new markets? And is there a opportunity on the private side to kind of draft behind them?
Yeah. I would say on more of the cloud or fixed line side, it would be NTT under their NTT communication side of the business. Not really their NTT Docomo, their wireless side has been making big investments, or really trying to expand their reach. Singtel has definitely been more on wireless. They've driven a lot of their revenue across ownership stakes that they were able to make in the last 10 to 15 years across Asia, which generates a lot more of their revenue today than domestically, which is Bharti, Globe in the Philippines, AS in Thailand in the past. So all of these markets have been able to generate the revenue to be able to reinvest that into what is the next phase of their growth for them. When it comes to the kind of private investment, they're on the large scale guys, the KKRs, the TPGs, Bains, the Apollos, along with the growing amount of dry powder capital that a Pacific Alliance Group, a Hong Kong-based fund, or an MBK out of Korea, there hasn't been maybe the big enough opportunities to go after. The most recently was Leighton Telecom out of Australia. And that was owned by Leighton Group, which is a construction company that took it over. After they built it, they ended up buying it because the original providers of that service went under. That had domestic fiber. It has data centers in Australia, and they're now trying to build a cable from Singapore to Perth with a landing station in Indonesia. That's through an auction process was bought by Ontario Teachers Pension Plan, which was one of their first directs. This is more of in a way, similar to a sovereign wealth, or kind of usually they invest in big private equities, but they're trying to make inroads, and you're seeing Canadian Pension do the same thing. So you have a more competitive dynamic, and a lot of money that's sitting on the sideline trying to invest, but not having enough of the kind of chunkier deals. They like to put in 100 to 500 million of equity across fiber. You see it in the satellite space, to kind of go off a little bit out of the cloud. There was an auction process for Optus satellite, which is owned by Singtel in Australia, but that was a kind of a failed auction process because of a disconnect on valuation. So that's the other side of the equation that still goes on. If it's carve-outs for large groups that are trying to maybe unloved or underutilized assets, which private equity loves to go after, or auction processes, there's still a valuation disconnect because of where the debt markets are today and how cheap capital is. So bankers are saying, hey, we can put X times multiple on leverage. That means this, an EBITDA kind of number. This thing's worth 10 times, but the real value private equity is looking to pay might be 7, 8, and looking for that uplift, but not willing to pay, the high price of what people think or, the market goes. So you'll see a lot of potential opportunities this year in satellite, in potentially in underwater cable. You've seen people look at Reliance Globalcom in the past. You've seen PacNet, data centers, potentially opportunities. So, and then going outside of that, even DTH, direct-to-home satellite. But right now it's kind of a valuation disconnect, and you're going to have competitive markets like an NTT or Singtel or even Bharti or Reliance out of India try to also maneuver themselves into these transactions.
We see, I mean, I'm going to echo Tim's comment, which is it is an incredibly positive time for new investment at the moment. There is, the public markets are trading at very high values for these businesses that have high growth. The capital markets, the debt capital markets are wide open, and people remain quite constructive on US credit, and so the lending markets are quite open. And the private equity industry has been raising capital again at an increased rate. The total private equity industry has got $2 trillion of assets under management, of which only about half is invested. So there's $1 trillion of dry powder around the world now for all industries. On the private capital, so on the large company side in the US, the company that I hear on the tip of the tongue with the CEOs that I talk to more than any other is Amazon. Amazon Web Services seems to really be scaring people with its claims of low pricing and broad platform. I think that bears further study, and in fact, I'm going to sing John's praises for a moment. He recently put a piece out on pricing across the cloud, which reads more like investigative journalism than research analysis. But I think one of the points there is pricing is still evolving very rapidly, and so people aren't exactly sure what they're getting in terms of value for money, even though it sounds like it is supposed to be clear, it is a lot less clear. On the private side, we see also a lot of money flowing into the smaller businesses. The private equity industry accounted for about 20 to 25% of the total transaction volume in the technology M&A market in the US over the last several years. And the reason for that in this segment is that as the mindset shifts and people go from I'm going to run it myself to selectively I'm going to outsource it, it is giving rise to a huge class of people who are writing the software, building the hardware, hiring the people. And they need capital, and many of these businesses are not big enough to access the public markets. They can't borrow the money, and so there really is a role for private equity to play in this market at the moment.
So are there more opportunities that you're seeing in single country investments, or does this require more of a pan-Asian approach to build the kind of scale, particularly that you, Brandon, mentioned, given the checks that are being written, sometimes, unless it's one of the larger economies, these businesses probably don't need that much. So how do you see that playing out?
Yeah, no, I think it's businesses that, that are more regional or growing regional, but it's where their kind of home country is. It restricts on foreign ownership rulings. Give you an example, the Indonesian wireless telco market, you can be, I think it's a 65% foreign ownership, but if you wanted to buy an independent tower company, there is no foreign ownership of independent towers. So if you're a wireless telco and you own towers, that's fine. But to carve that out into a separate entity and have a tower company with, third-party base stations, no, that's not allowed in Indonesia. So those type of rules and regulations, similar to the Indian market, used to be 49% foreign. They pushed it to 74%. But the government has really restricted investment, and you've seen a lot less investors look at India over the last few years because the government really did a lot of mistakes with previous 2G auctions that pulled licenses from foreign owners and have destroyed that market for the next few years, and it's finally starting to come back. A lot of investors invested into tower operators and the wireless space. They're still stuck in that investment, and it's getting a little bit harder. So Asia has a little bit more headwinds with regards to country-by-country regulations and different timings of currency and fluctuation of domestic economics that make it a little bit harder for certain investors to go in certain markets. And they kind of still try to, focus on more the developed rule of law where they feel comfortable investing and trying to get out. So it does hurt some players or some markets to get the private equity in to be able to become a large player globally because of their own government restrictions.
I totally agree. The dream of a pan-Asian player,
yes,
and there are a few people who are making inroads on that, is very, very attractive. Where I've spent the most time is in the data center and hosting spaces, and those tend to be actually quite local markets. One of the trends I heard about at this conference is the fact that the amount of intra-data center local delivery is an ever-increasing portion of the total. And so we find it in practice to be a lot more local market than the theory might suggest.
So audience, last chance for questions if there are any. So, Brandon, you brought up an interesting point. There's differing levels of broadband adoption within the region for both fixed line as well as wireless. 4G is one of the rare areas where the U.S. I think is ahead of most regions. But where are we in terms of the certainty of licensing for auctions for deployment of 4G? And so maybe you can kind of give us a quick tour across the region as to where.
The closest markets that are the most developed with the United States is definitely, you'd say, Japan, Korea. So even in Japan, all three operators are doing LTE in different bands. And you see SoftBank having a TD and an FDD type of spectrum plan for LTE. One in their TD space, they'll play with an old Wilcom, which is the name now, it's called Wireless City Planning. They have over 2.5 million subscribers on a TD network, a TD LTE network across the Japan market. And you'll see what they, with that expertise, they'll bring it to Clearwire here in the United States and switching that over from WiMAX to TD LTE in the coming months. So that leveraged them to be able to do that. There are, markets like in India. India, the only one that has a Pan-Asian TD LTE market is Reliance Jio, which there's two parts of Reliance. There's Reliance Communications, which is Anil Ambani, and the Reliance Industries, which is Mukesh Ambani. He had originally, through their brother partnership, decided to split the telecom business, but now he's coming back into telco with a 2.3 gigahertz, but a TD LTE on a pan-Indian context. So a lot of these guys have gotten into 3G pretty late. And now with some of the TD spectrums that were initially given to WiMAX players are kind of jumping into an LTE more data service. You're right, some of the cities have fiber in the metro rings, but outside of that and where the connectivity is going to go for internet is smartphones, tablets, lightweight devices, and it will be over wireless. And you're seeing that case from a very developed market to a developing market, that they're going to be try to catch up and close that gap over the next couple of years in spectrum and type of services to the marketplace, especially because the handsets have priced down. Smartphones, you used to be trying to get smartphones to $150, now trying to target $50 smartphones in these developing markets. That makes it more reasonable to get onto the web.
So I'm going to let Tim have the last word, and Brandon touched on some interesting points about device subsidies, and many believe that in the U.S. they have gone away because of the actions of T-Mobile. And then you also brought up the issue of standards. When you have large economies like China, India, and Japan supporting a different flavor of 4G, it paves the way for a company like Sprint in this country to then introduce that and gain some volume efficiencies and perhaps overtake, let us know if you think this is true, but maybe overtake Verizon in terms of capacity and throughput. And then further along on the data center side, you've got OpenIX, which is a new initiative in the States to try to open up the environment for peering in each metro area in a market where perhaps a Telex or a CoreSite or an Equinix dominates it. OpenIX has the potential to make peering broader spread across the metro. So a lot to fit in, but any kind of comments on what we just touched on?
Well, broadly speaking, I think we're in about the second inning of the infrastructure that's going to be required for cloud. To your point, Sprint is going to open up a wide breadth of spectrum, and there's a lot more spectrum actually getting auctioned off in the United States. Actually, I calculate almost potentially a 40% increase in the spectrum that's out there in the next kind of 18 months to 2 years. Sprint and T-Mobile have unlimited data, so plans that are out there, we're going to see extremely strong volume growth. I think the networks have to be upgraded to enable a lot of what Amazon is doing for computing, basically real-time, kind of a perfectly scalable bandwidth out there on the fiber side. On handsets, I've been a big proponent. Android-based handsets are plummeting in price. That's going to enter the United States the next 2 years. It's very positive for T-Mobile, the way they kind of sell their services. I think positive for Sprint. For AT&T and Verizon, their model has been to really subsidize really high-end handsets. I think that model's in place for another year or two, but it's kind of hard to see how that's going to be sustainable, and particularly how the to me, the Apple-based kind of $650 prices are going to be sustainable with Android. If Android phones are hitting $50, which they will.
They are, because even the local manufacturers in India and Indonesia are, getting into the market. It's not just Chinese handset manufacturers. So
Interesting.
that is the growth.
Great. I think we have to call it. Our time is up, but appreciate the panelists participating here.
Thank you very much.